Good morning. It's Friday, December 20th, about 6 a.m. Central Time. It's been a very busy morning here. So looking at these precious metals, they're slightly mixed right now after yesterday's continuous sell-off. We did see the bargain hunters come into the gold, the silver market yesterday, kind of lift those markets off the floor. But looking at the overnight price action here, you do have February gold up $9, $26.17, kind of in a range, 2,600 held, 26.22 has been the high of the session. So we're trading at that higher session. Silver gave up a lot of the gains that it saw in the afternoon yesterday. The high of the overnight session, 29.51. The low, 29.19. Market trading at 29.22 last. Copper futures kind of stuck in a small range, 408 last. Low 407, high 411. You do have aluminum slightly higher. You have platinum recovering as well. Platinum is the one that seasonally has done the best kind of month over month, week over week, historically when you go into the December contract. Now, if you look at some of the seasonals, you look at something like More Research puts out February gold, buying it on December 20th, sell it on January 13th. It's worked out 14 out of 15 years. So that's a seasonal. That's something that happened in the past. Doesn't necessarily mean that it needs to happen in the future. So that's kind of the rundown on what's going on in overnight session in the metals. You start looking at some of these outside markets here. So the S&P is set for its biggest 1 week drop in 4 months. So looking at the S&P, down 54 points right now and making a new low on the session. So it's down about 1%. The NASDAQ also down about 1.4%. The Dow down 0.5%. The Dow ended its losing streak yesterday. That was like the largest losing streak since 1974, but it continues to tumble here. So no real strength there whatsoever. We did have a Republican-backed bill. It failed with 24 hours to go until a government shutdown. That could be putting some of the nervous pressure on the stock market. It also could be putting a small bid on the gold market at the moment, but not necessarily. I've done this so many years. I've seen how this had a meaningful impact back in the day, and it seems that it loses less of its luster here as the years have gone on. We do have another big event here in the U.S. equity markets. It is triple witching. It's where the futures, the stock options, and the futures options, they all set to expire at the same time. It's $6 trillion worth of options that they are going to expire today here. So also, volatility. So you look at the volatility index, you look at the 1 week performance, it's up about 41%. So it's spiking to its highest level since August. And then something else with the US equity markets, you have a rebalancing that goes on. So they rebalance it every so often, the S&P 500 and the NASDAQ. So where that's important, if you're a trader of the S&P and the NASDAQ, specifically on the futures, you really want to know what the strongest weightings are within those and who's make the biggest move. That way you could have a checklist of several stocks that you look at. And oftentimes if you see those stocks make a particular move in a direction sharply with no real reaction in the futures markets, then you could front run it as a futures trader. We do have bond yields also, the 10-year yields kind of creeping higher at 4.55%. And then finally you got Bitcoin sliding about 4% right now, making new lows here with the NASDAQ and the other equity markets. Now, getting into some things here, we do have quite a bit coming out today here as far as economic data. We've got the core PCE. We also have a FOMC member speaking, and then we have personal income and personal spending. We have those University of Michigan, the consumer sentiment, and also the inflation expectations. The core PCE is forecasted at 0.2%. The previous was 0.3. If we can get that tick down in core PCE, you might see a small relief rally coming in these markets here. If you also get personal income coming down and personal spending kind of coming more in line with expectations, you could also see that relief rally as well. Part of the problem is the University of Michigan, the consumer sentiment is supposed to tick up as well. Now, getting into the precious metals markets, really you look at kind of this consolidation zone in the metals markets here because of the fact that we're kind of trading. The way the metals have been working, and specifically the gold market, is they kind of stair-step their way up. They consolidate for a while. They stair-step their way up again, and then they consolidate again. So I think we're back in one of these consolidation phases. Now, it's quite wide. It's from like 2,800 down to about this 26 to 25.50 pocket support area. So if you're going to look to add into some of those markets like the gold market, you start to pre-position into those lower levels, and then you let some of the trade go when you get closer towards that high end, waiting for a breakout. Now, I read a lot of reports here yesterday after the market closed, specifically from like Goldman Sachs, JP Morgan, things like that. And a lot of them are saying that, yes, the $3,000 mark on the gold market, it's still achievable, but it's going to take different variables in 2026. A lot of them cited that there were two possible headwinds for that market. And really, one of them was that they do have lower expectations on the number of Fed interest rate cuts. So they're saying that that could erase about $100 off of that year-end target in 2025. So that's where your 3,000 comes down to 2,900. But then they also say if increased central bank buyings occur because of the fact of a Trump administration coming in, then you're going to see that'll ratchet back up again. So they surveyed, this was a World Gold Council, they surveyed a number of central banks here, and it was like 81% of the central banks were expected to continue to increase their gold holdings. Now, the thing about central banks is they do two things here in order for safe haven. And this is where you see the dollar index and the gold market. Sometimes they travel together. That's central banks buying both of those products at once. And then you'll also see when the dollar index weakens and gold futures come up, especially with the dollar index near some recent contract highs, that coming off. And if you see gold futures lift up, what a central bank will do is they'll release and sell some of their US dollar holdings, and they'll use that money to buy gold holdings at that kind of discount. I got a lot of people asking me about silver specifically. Silver has got this kind of 32 and a half, 32 to 33 kind of resistance point, and then your critical level of support in the range that I would start accumulating again is going to be, we dropped below 30, so we had that big sell-off here yesterday, that breakdown below it, and then the pocket support is about $28 on up to 30. So that's kind of the first major zone that I would look at as far as a critical support level on the silver market. Bitcoin will probably start looking at as when the new year. So part of something else is that when you get past this week, because this week is the final full week of trading, you get the rebalancing, you get the expiration on all these different things. This is where a lot of people come completely out of the market whatsoever. They call it an early end of the year. The trading volume comes down. We go into a lighter trading fashion where people kind of retool and figure out how they want to position in 2025 for the next year. And what happens is we generally drift higher in many different asset classes seasonally, because of the fact that you've got lower volume and you've got this planning going out here, and allows people to start to take positions in these markets. That's why it's often euphoric into the first week, and we see a big move higher in a lot of the different markets across the board, regardless of factor style and things like that. Now you get into the performance, and I was looking at the 1 week performance on a lot of things, because generally, like what I said, is on Fridays and Saturday, what I'll do is, hey, what happened last week? Where are we at on the week, the month, the year, stuff like that on the quarter. We do have silver down about 5.65%, the S&P 500 down almost 4%, the copper market down over 2.5%, gold down 2% as well. So a lot of pressure on these markets. You look at the market that's squeaking out a gain, like 1 week gain, platinum is up, but we talk about how platinum has done so well seasonally year over year, and it's for whatever factor. I think that a lot of these companies are trying to like rebuild inventories and pre-plan on what they're doing. So, and it requires platinum and things like that in order for them to do that as well. So looking at, I run a kind of a breakout system that gives me which way the trend is on different markets. And unfortunately, the trend on a lot of these metal markets had shifted from where they clicked into bullish for a brief moment. That was last week, right around that heightened breakout that we saw on about December 10th, 9th, 10th, 11th, in that range. And then we get almost the breakout on a lot of different metals. and then we start to come down. It triggers neutral, and now it's breaking down into bearish trend. So that's on the gold, silver, copper, platinum as well. They've all kind of clicked back down into a bearish trend. So it doesn't necessarily mean you got to attack it from the bearish stance. It just means that you should be at your lighter position and really selective on where you're going to add and reduce positions. So something else a lot of people are asking me questions about on the US equity markets, and this is kind of the problem with the equities, what they've had recently is that you think about the way we've traded before. We would come up and it's similar to the gold market and silver. And this is part of the reason why silver kind of takes the stairs up but the elevator down, is that you get this momentum shift in the market. So we were able to build a lot of different support levels in US equities over time. You get consolidation phases. So that's where like silver consolidates for a while in an area, and then all of a sudden it takes off. Well, when you had that takeoff before the election, on November 6th in a lot of these US equity markets, they never had a spot to consolidate and allow funds and things like that to really get comfortable and accumulate a lot of positions. And it's where those accumulation phases occur is where major levels of support occurs. So when you have no accumulation phase and you get the market goes like this, well then the first little win that's in the wrong direction, or the first little where people get nervous about it, that market breaks pretty quick. And that's what I think is happening in the silver. So you're not getting like bases that are there where you've got good bases in the gold market at the moment. Now back on silver, I'm going to say you have good bases at these levels coming down in these lower levels, but on the upward side, there's not a lot of good bases and breaking out. And it seems like you get these pockets from where you go from $30 to $32, and then it breaks back down. So you want to see slow accumulation and several days of consolidation in different areas. So if you got any questions, you give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.